everyone, and thank you so much for joining us. Today is the fourth event of this year's Digital Asset Compliance and Market Integrity Summit. My name is Alyssa Ostrov. I'm the Chief of Staff at CryptoCompare. This year's DACOM is a bi-weekly series of virtual panels running every other Thursday throughout early December and covering the most pressing issues in digital asset regulation, compliance, data, and market integrity. We've been fortunate to have hosted some fantastic panels and fireside chats this year, covering a range of topics from crypto ETFs to compliance approaches to what we can expect from the CFTC this year. You can find all of these on both the CryptoCompare and Solidus Labs YouTube pages if you are interested in checking out some of the past sessions. While this was meant to be our last DACOM event of the year based on the popularity and feedback of this year's events, we've actually decided to add in an additional session that we'll have in 2 weeks' time. We hope that you can join us as well on the 3rd of December, same time as right now. We're going to wrap up this year's summit with some of the leading digital asset exchanges in a discussion about market integrity and industry maturity. This year, DACOM is proudly brought to you as a joint effort between both Solidus Labs and CryptoCompare. Just a few words about us. CryptoCompare is a leading digital asset market data company serving corporate, government, and retail clients. Our premium data and analytics provide a comprehensive, granular overview of the market across trade, order book, historical, social, and blockchain data. Solidus Labs offers the first crypto-native market surveillance and risk monitoring hub specialized for digital assets. Solidus works with crypto businesses globally to help apply for licensing, attract institutional investors, protect their users, and grow faster and safer.
Thank you, Alyssa, and thank you for everyone for joining us. We know there are a lot of webinars going on, and we appreciate you spending the time with us. I'm Gattaca, the Chief Operating Officer of Solidus Labs, and one of the key reasons we started DACOM was to help bridge between the industry and regulators. Both Solidus and CryptoCompare work very much within this intersection, and we know that for years now the industry has been thirsty for regulatory clarity. And then, over the past few months, with dedicated regulation and legislation for digital assets introduced practically everywhere, from Hong Kong, Singapore, and Malaysia to Switzerland, the EU Parliament, and US Congress, many believe we reached a regulatory watershed moment. Are we moving from a regulatory sunrise to full daylight, as this panel's titles go? So, is that the case or not? To discuss those questions, we're very privileged to have a remarkable group of experts who are actively shaping the future of digital asset regulation as regulators and policy advocates for the industry. I can't wait to hear from them and everything they have to say. So to get us started, I'm delighted to introduce Lawrence Wintermeyer, Executive Co-Chair of Global Digital Finance and our fearless moderator for the day. With 25 years of experience promoting digital finance, including serving as the CEO of Innovation Finance in the UK, Lawrence is globally recognized as a leading expert on financial innovation. Both Alyssa and I, Solidus and CryptoCompare, had the opportunity to work with him establishing GDF's Code of Conduct for the industry, which has helped shape regulation. So without further ado, Lawrence, thank you for being with us, and over to you.
Well, Chen, thank you for having me, and what a privilege to moderate with such distinguished guests today. And thank you for that lovely introduction. I think this year, you mentioned the number of webinars and conferences. I think this year, and because, most of us are virtual, all of the, the financial services, crypto digital conferences have been stuck in between the US election and Thanksgiving. So I think this is a 5 or 6 conference week for me, but I'm absolutely delighted to be here. And I think, we'll all recognize that 2020 has really been a politically and economically volatile time with geopolitical trade tensions, a US election, impending Brexit. We really don't know which way that's going to go. And of course, the human COVID-19 crisis. And I think we can all give thanks that there's a light at the end of the tunnel with multiple promising vaccines emerging. The global regulation landscape as it relates to crypto and digital assets has been pretty active as well. And Chen, you mentioned a few things, but I think in the US, between the OCC's crypto guidance, CFTC prosecutions, the focus on things like digital digital dollar, which Daniel Gorfine will get into a bit later. We've seen tons of stuff, and hopefully we'll get a chance to cover this with our panelists today and reach out and look at what's going on in the rest of the world. And just as an example of things on our radar in GDF, the UK retail ban on crypto derivatives, which will take effect in January of 2021, the Hong Kong new proposed crypto licensing regime, which looks to ban retail clients from the cash spot market, Europe's proposed MiCA framework, which is promising to really provide an inclusive framework for the growth of crypto and digital assets for all of society. The continuation of the FATF-R16 implementation and things that Amy and I are certainly involved in the joint working group with the DACSA in our own associations. And of course, again, the domination, I think, of stablecoins and CBDCs with more consultations, white papers, and projects, I think that many of us have seen in a few years. And this is just to name a few. There are tons of other things going on as well. And I think that crypto has really more than weathered the volatility and volatile markets we've seen in 2020. And in my own community, it's really being seen by many private investors as part of a risk-adjusted, diversified asset allocation strategy. And I don't think I'd go so far to say as it's viewed as a safe harbor asset. But people are calling it digital gold. It is providing diversification. And I think that policymakers should really pay attention to this. And, particularly for folks of my vintage and who've been through as many volatile markets or, traded through a number of market corrections. From 2008 and the financial crisis forward to now, I think many of us would conclude that, look, the financial system is a bit broken and we need to repair it. And when the government debt markets, which certainly by my account are the largest markets in the world, if we discount the derivative markets, which are much bigger than all of the other aggregate markets defined, but when they're not yielding or yielding negative, and the smallest asset class, as in Bitcoin or crypto or digital assets, is yielding, policymakers should pay attention to that and start to understand some of the reasons around why these instruments and why this new form of technology and finance coming together is so possible, so promising, and what it has to offer. So today we're going to have a look at where crypto regulation is headed. Again, I'm absolutely honored to have been invited to moderate this session with such distinguished guests. And rather than me introduce them, I'd like each of my guests to introduce themselves and then spend 3 or 4 minutes talking about this global forward-looking regulatory landscape from their perspectives before we drill into some specific questions. And now I will ask all of you in the audience as well to have a look at the chat function at the bottom of your screen. You can ask us any questions, and I will do my best with the DACOM team to try to moderate those. As well, we have a number of polls. Some of them may have just popped up in front of you. There are 3 poll questions, so if you would like to answer those, we'd appreciate that, and we will try to get back to those poll results intermittently through this session. So if I can turn to panelists now, and Daniel Gorfine. Dan, can we start with you, please?
Sure. Thank you so much, Lawrence, and I want to thank Solidus Labs, CryptoCompare for having us. Great to join this panel. So my name is Daniel Gorfine. I am the founder of Gattaca Horizons, a FinTech advisory and consulting firm. I'm also the co-founder and director of the not-for-profit Digital Dollar Project, which is focused on exploring a US CBDC. We'll talk more about that in a bit. I previously had the opportunity to serve as Chief Innovation Officer and Director of Lab CFTC at the US Commodity Futures Trading Commission. So, Lawrence, in terms of the question of where is crypto regulation headed, maybe for my initial remarks, I will say that I think it's really important that we unpack what we mean and what are the various elements or categories that make up this broad topic. So, more specifically, when it comes to crypto, I think that there are at least three relatively distinct issues. First, there are the underlying technologies and what they mean for regulation. So here I'm thinking about tokenization and cryptography and the blockchain rails that tokens are effectively transacted upon. So what do I mean by this? When it comes to cryptography, how does custody work? We know how you can take a gold bar and put it into a physical vault, but when you're dealing with crypto assets, how do we think about custody? What does it mean for a regulator? I think that that's a set of issues. Second, there's the question of what particular asset are we talking about? To say it's a crypto token, quite frankly, that doesn't mean very much. At least from a US perspective, most regulation flows through the definition of the asset. So are we talking about a token that represents a commodity? Is it a currency? Is it a security? Is it a derivative? Or is it something novel or something that kind of sits at the margins of those definitions? That matters a lot when we talk about the future of regulation. And finally, I'll just make an overarching comment that everything we're talking about here, and I think that this has commonality with broader FinTech issues, all of this is enabled by the internet, right? And so what the internet does is it allows for rapid adoption of new business models. And these adoption of models that can cut across geographic and traditional industry borders very readily. So that puts pressure on regulators and regulatory frameworks because we see incredible scale, again, not just across a state, but across a country or across the world in very short order. What does that mean when you start thinking about trade integrity, market surveillance, surveillance of assets that can trade across platforms and exchanges around the world as opposed to on a set designated exchange? I think these are all the things that you need to flesh out within this conversation.
Well, great. You've set a very ambitious agenda for us for the next 45 minutes. Thank you very, very much, Dan. Amy, could I call on you next, please?
Sure. Thanks, Lawrence, and thanks, everyone. It's great to be here with you. And so I'm Amy Kim. I'm the Chief Policy Officer for the Chamber of Digital Commerce. We are a trade association. We're 6 years old with over 200 members spanning the entire blockchain ecosystem. And I lead all the Chamber's policy work. So that would include issues around digital securities and commodities, payments, stablecoins, CBDCs, DeFi, custody, AML, tax, legislation, you name it. And so, we generally advocate for the acceptance and use of blockchain technology in all of these areas. I have to agree with Dan, so I don't want to repeat what he said. I think it was quite thorough, really, and insightful. So what I'll say maybe from the industry perspective is, I do think we're coming into a pretty extraordinary year. We're in the midst of it, but I think we're at the beginning stages of it with, China's DCP coming online. You even have the Fed starting to look at it, of course. Dan's organization, I think, is doing extraordinary work moving the conversation forward on a digital, what a digital dollar might look like and the principles that need to underpin it. You've got the extraordinary expansion of DeFi. Literally in maybe a 6-month period of time, that level of expansion. And then combined with that, so many mainstream players like PayPal, traditional banks, custodians, exchanges, taking this technology up. I think we're in for a productive and interesting year from that front, that kind of corporate adoption. That said, the juxtaposition of that with, I think my personal view is I think regulators still have mixed views about the technology. And, especially at this moment in time in the US where we're going through a potential transition, I guess, do I say potential transition? I think we have our work cut out for us to make sure that anybody that's coming in new, and in government, there's always, folks coming in that are new, that they understand this technology, the benefits that it offers, and a clear-eyed understanding of the risks and how we are mitigating that as an industry. And ensure that anything that is done, in the coming year is done intelligently and with an eye towards promoting innovation. And that's a real balancing act, I think, especially at this more early stage of growth. We are kind of starting to have an upswing, I think, and take up, as I was saying, but it's still relatively early and not an established industry. So any misstep, I think, can really have negative consequences. So lots going on. Looking forward to diving into that.
Great, thank you very much, Amy. And I'm adding and accumulating this list that Dan's set out. But I'm glad you did mention folks like PayPal coming in, and then DeFi. So we'll get on to that. And then, last but not least, Sir Matthew Homer, can you please introduce yourself and give us a few minutes?
Yeah, thank you, Lawrence, and good morning, everyone, or good afternoon, or good evening. Thanks to the organizers for this session. Yeah, so I am the Executive Deputy Superintendent for Research and Innovation at the New York State Department of Financial Services, which is the regulator of financial services in the state of New York. And in addition, just to give, if people aren't familiar with DFS, we regulate a very wide set of activities: the banking sector, many foreign banks that are located in the United States. We also have the insurance sector, including the commercial health insurance market, and the crypto space. About 5 years ago, the department was one of the first regulators in the world to issue a regulatory framework for virtual currency business activity, as we define it in our regulations. And moving forward from those 5 years to now, we've really seen a dramatic transformation in the marketplace. We have now more than 24 companies that are licensed and supervised by the department. And as I think, Lawrence, you rightly mentioned, our discussion in the context of COVID, and I think that we at least from the New York perspective, we see financial innovation, FinTech, and crypto as being a really important part of the state's economy, and an important element of building back better and promoting economic growth as we emerge from it. I'll just add a few things that I know it's a crowded table, as you said, Lawrence. I'd add like a few things. I think that just a few observations. One is that I think COVID has really shown, at least in the United States, the extent to which our digital infrastructure is aging, and really has unfortunately not kept up, I think, as much as we needed it to. You can see that in the context of PPP lending. You can see that in the context of stimulus lending. You can see that in the context of state unemployment benefits. And so, I think that as we look toward the future, potentially the next 4 years, we really need to think about the role of digital infrastructure. And I think that blockchain, crypto, the things we'll be talking about today are potentially very important elements of a future-looking digital infrastructure for the United States. I think, as others have mentioned, we have seen a real mainstreaming of the crypto space recently, PayPal being a notable example. And we were played a small role in that in providing them a conditional license to operate in that space. And I think that stable coins are a part of that trend toward mainstreaming. I think we also see an expansion to new areas, and it's no longer just payments or confined to specific areas. I mean, with DeFi, you really see it expanding to all sorts of new areas within the financial services space. And that, of course, as others have mentioned, puts pressure on regulators, right, to think about how do we regulate this. I think there was a time a few years ago when some regulators maybe thought they could just sort of ignore it and see if it went away. And I think that it's pretty clear that's not the case, right? And so I think every regulator knows that it's something that requires attention. And the real question now is, well, what is the framework? I mean, we have an approach in New York, but we know that it's a fast-moving space, and we have to continually evolve that framework. So I think you see now at the state level and the national level, a variety of frameworks emerging, which I think is good. And then I think Dan may have touched on this a little bit, and we can talk about it more later. But I think having the right regulatory framework from a regulator's perspective is only half the challenge. And in this space, you're going to have to constantly iterate that framework. The other half is actually having the tools to properly monitor the space, right? So if you have regulation, but you don't have any ability to sort of monitor and keep up and know what's going on, it doesn't matter so much. And so I think that's another important challenge and focus area for regulators going forward, is how to develop the internal capabilities to properly monitor the space.
Well, thank you very much, Matt. I mean, you raise, I think, a couple of interesting points that we do need to pick up today. One about the maturity of adoption, and I think for many people who've been in the crypto digital space for many years, there's certainly a recognition now that there's a valid use case and social utility for this, and that the digital tools that come with can actually help a lot of stuff like getting money to people. It's just we might not have worked out the best way to do that yet. And I think we should touch on this at some point when we get into infrastructure. But it always occurs to me that what regulators quite often miss is that with digital technology, and you find this listening to the Homeland Security folks, so in the UK they call them the spooks, that are very focused on public networks. You can see pretty much everything that goes on, and so there's a real disconnect actually between policymakers and how the technology works, particularly when you're speaking about things. Well, hey, market stability and how we look at the integrity of markets. A lot of this stuff is really a lot easier to do in a purely digital environment, certainly than it is in an analog paper and electronic environment. So it'd be great to come back to some of those things. Let's kick off with some questions. Now, we've tried to group this, I think, into a digestible format for the audience today. So I'd like to pick up global regulations, reg frameworks, and broadly enforcement issues as a first clump. And we're going to take a counter around the world. I think we'll always have a look at what's going on with Matt in the US, and between Daniel and Amy, in New York, and between Daniel and Amy, test what's going on in the US and then in other parts of the world. But Dan, can we start with you and just give us a view? How is the US reg system evolving? And I mean, what are the important things? What are the key takeaways for delegates to lodge as we go into 2021 on this?
Yeah, thanks, Lauren. So I'll try to tie this back to my initial remarks. And I think overall, our system is still working to understand, what this space is and how it should be defined, kind of along those elements that I outlined before. I think some regulators are further along. I will compliment Matt and New York DFS. And I think in large part because of Matt and his team's work, they seem to be at the forefront of understanding some of these distinctions and some of the specific issues that arise with whether it's the asset, whether it's the technology, whether it's the cut across of jurisdictions and traditional spaces. So I think there's a spectrum of activity, but let me try to kind of outline the landscape as I see it. So, again, most of the activity, and at least from a US perspective, occurs through the regulator and the specific regulator with respect to how the regulator defines the instrument and then analyzes how that flows through a particular rule set. So what do I mean by this? So, at the state level, we continue to view cash or spot crypto markets largely through a state money transmission framework. So most states will license and regulate crypto exchanges at the state level through a money transmission framework. Some states have created tailored or bespoke regimes like the New York BIT license, which I'll let Matt speak to. At the federal level, and I'll go through some of the major agencies, both on the capital markets and on the banking side, but as we all know, the SEC dealt largely in 2017, 2018, and into 2019 with the ICO mania. And that was kind of a primary focus, and a lot of that was through an enforcement lens, where there were many offerings that the SEC viewed as unregistered securities offerings. Now, I think a lot of that activity has tamped down. So the issues the SEC is dealing with now, it goes back to that underlying technology, thinking about who's a proper qualified custodian within the SEC's regulatory framework. Is it does it need to be a bank? Does it need to be can a state bank, can a special purpose state bank be a custodian? Could it be a trust, maybe a New York trust? How do we think about how the rule set flows through this technology? The other area for the SEC to keep an eye on, of course, is around Bitcoin ETFs. There remains, a substantial amount of interest and demand for a Bitcoin ETF. In my view, I think a combination, as Matt started alluding to, of enhanced market surveillance capabilities combined with further development of regulated CFTC derivatives markets may be part of the elements that drive eventual approvals. Speaking of the CFTC, the agencies continue to kind of recognize and permit the growth of regulated crypto derivatives markets. And I think that this is an area where there's been a substantial amount of innovation taking place. Now, let me end in terms of the US landscape with a look at banking, as I referenced before. At both the state and federal level, there seems to be recognition that certain types of entities, so trusts or, again, licensed banks, may be natural custodians of digital assets. So there are some long established models like the New York Trust Framework, and there are now other states that are offering new either trust charters or special purpose banking charters. The OCC under Brian Brooks has been very active in recognizing the potential role that national banks or national trusts can play in custodying or just transacting or dealing in digital assets. So I find this to be a really incredible inflection point, because you see the confluence of kind of capital markets regulation with banking regulation as regulators try to figure out what are these assets, again, how are we defining them, where do they fit, how do they flow through the regulatory framework. I don't expect any dramatic, we can talk more about, future of policy, but I don't expect any dramatic changes to the way the US system works, both as a matter of federalism, state versus federal, and as between different agencies. I think what it makes critical is some coordination and hopefully harmony between regimes, or recognition of regimes to provide more clarity to the industry.
Right. I find that incredibly helpful. And so, not a lot of change coming, and that most of the agencies and the scope of agencies are in place. Should be reasonably clear, depending on the asset class, which agency, picks things up. I mean, my own view, and close to your old home at the CFTC, where we've seen growth in, particularly the derivatives market and now the perpetual market. I mean, that makes sense, because those are typically eligible investors or MiFID professional investors in Europe, institutional investors. But a lot of the, and just a quick one back on this, a lot of the issues particularly are around, is it safe in the pool for retail customers? And is that, with this, focus on custody, particularly payments, is that where you see a lot of the, the kind of Gordian knot of things trying to unpack itself in that retail space?
Well, I think that custody is just such an important and interesting issue. And I mean, maybe to level set, I would say that, historically for the last 100+ years, we haven't worried or thought much about custody, because we had figured out how to do that, whether it was like with gold bars in a bank vault, or with cash, or with commercial bank money. We have pretty well settled expectations and practices around custody. What digital assets represent is a new, unique asset where you're safeguarding private keys, and it's just a different set of issues and potential risks to mitigate as a custodian. And I think that's why there's now a renewed interest and focus on this, because we're going back and kind of dusting off the textbook, saying, well, what is it that a custodian does, and how should a custodian do it in this digital world? And it's incredibly important to get right. This system will only work if there's trust and safety in the system. Obviously the fact that tokens create digital bearer instruments, which means whoever holds it owns it to a large extent. So it makes it a very, very important issue, I think, not just for retail, but for institutional. I mean, as faith and confidence in digital assets builds, it's going to require trust and confidence in the custodial regimes.
Absolutely. Let's have a look around the rest of the world. Amy, what's the global landscape look like from your perspective?
Well, yeah, and if I could, I'll get to that. I just want to touch on something Dan had said earlier, because I agree with the way he's describing it. And just to add a little bit of nuance to it, which is, we did historically, you referenced a lot of enforcement actions in the SEC, acting in that way, and understandably in some of the cases of fraud and things like that. But we did see a lot of, at the federal level, predominant enforcement activity or concerns compared to guidance and positive actions. And so in the US, you saw the states then, a lot of states take it onto themselves to create legislation that was kind of promoting blockchain specifically, welcoming the technology to their borders. I think now we're starting to see a little bit of a shift with the OCC's guidance that has come out since the summer. The DFS, looking at lists of approved assets. I think we're starting to shift a little bit, and the custody space, I think, is one that I think is ripe for tackling now. I know that there's been reports even back as 2017 from FINRA kind of questioning what that should look like. Then 2019 with the SEC and FINRA staff letter, and then even kind of recently with the Wyoming situation. So the U.S., starting with the U.S., it's this kind of, I feel like we're shifting a little bit into the how do we promote responsible innovation, to use a term that Chair Tarbert has started to coin. Then looking globally, especially I think since when Libra made its announcement, I guess a year and a half ago now, time flies, really commanded everybody's attention, because you could finally see we had a scaling problem before, and we still struggle with that a little bit. But with Facebook being behind it, you could see the global reach this technology could have, and I think what that's done, and we're seeing this in the BIS, the FATF, the OECD on tax issues, as an example, the G20, looking, trying to understand something that we really haven't had to grapple with before. And so I like how Dan described it, like you're kind of going back and looking at, well, what was the reasons behind these frameworks we have? And rethinking that, going back to the principles rather than the words. And, when you think about a private payment system, for example, or privately issued money, we really haven't had to deal with that. I mean, at least in modern times. And so how do we think about that? What does that mean to fiat currency and sovereignty over that? So I think that's what you're seeing. The BIS doing the study that 80% of central banks around the world that they've polled are looking at this technology, and 50% are actively piloting. Those are extraordinary numbers. And then, even in the, I think the concept of what we're calling DeFi, I think also is kind of challenging people's concepts of how do these frameworks work in that environment. And so we're talking about decentralized finance. What does that mean? And really, I think it means unhosted wallets, or, I've heard some say self-hosted wallets, which I think is actually a great term because that's more accurate. And how does that play into the regulatory framework, the policymakers framework, while still protecting individual rights to use technology, to engage? So that, I think, is the challenge that we're seeing on the global level, and really grasping. I think we saw that with the FSBs, the Financial Stability Board's inquiry that they put out that we commented on. How do we deal with global stablecoins? Which, I mean, we've never even heard of those terms like that. And a bearer instrument is global by nature. So how do you define global? What should reach that threshold where you're thinking of it as a potential risk to financial stability? So those are just the kind of extraordinary concepts that we're looking at and having to face head on and think about from a principles approach.
Well, I think that's an excellent point. I mean, from where I'm sitting, it appears that the G20 global headwinds from all of the work that was done this year would indicate that global stablecoins are a priority for some sort of regulation or better maturity. And Amy, last year you and I were at the OECD Blockchain Policy Forum in September. When there was quite a bit of buzz around Libra, and walking around saying, Libra was the face that launched 1,000 CBDC projects. I mean, it just seemed to go nuts. And I only put that into context because I think it was probably the year before that, doing a panel with central bankers, particularly focused on Bitcoin, but algorithmic decentralized currencies, and a lot of the underlying technology that sits behind what we call DeFi, asking them their view about it. And, broadly, the view was, look, we're not too bothered about it. Doesn't look like it presents a financial, stability issue globally. The FSB kept reporting on that. But, probably not surprisingly, central is in the name of central bank. Most of them said we have no use case for, an algorithmic cryptographic decentralized currency in this context, but we can see the benefit of digital currency, whatever that is, and that seems to be part of the biggest issue with even in the context of a retail CBDC, anonymity or a bearer instrument like cash, or to what level, versus something that has a provenance behind it. It's just that whole area has really become complex. It'd be good for us to unpick that. Matt, can you give us an idea? I mean, what are the developments in New York, and what are the things that you think we need to keep an eye on going into 2021?
Yeah, thanks so much. Yeah, I think that Dan and Amy have really done a great job of laying out the challenges, and I think all the just the enormous questions, right, that I think we're grappling with. And I would agree with all that. I mean, I think it is, from a regulator's perspective, I think, the space just evolves so quickly, right, that keeping up with kind of the products of today, let alone kind of the products of tomorrow, is quite challenging. And I think will continue to be challenging. Just want to touch on a few different things. So, the concept of trusts have come up, and just as I'll resist the urge to kind of go too deep, but just to give the audience a sense of sort of the New York framework. Basically, in New York, if you want to engage in virtual currency business activity, you have three options. So you can get what's become colloquially known as the BIT license. You can get a trust charter, or you can be already licensed by us or chartered by us as a bank. And we have an activities-based regulatory framework. So it's very broad because it was developed, as I said, 5 years ago, kind of in the early days, and I think very intentionally was left broad to provide flexibility. But basically, if you're providing exchange services, custody services, or if you're issuing, administering, or controlling the minting of coins, then you would fall under the regulation. Now, importantly, we regulate the intermediaries of those activities. And I think, as Amy has mentioned, as we move to a decentralized, I mean, there is actually an exception for software in the regulation, but I think as we move toward a decentralized finance context, it's going to require all of us as regulators to think, really, I think in totally new ways about how we do this, and I think it will really require a close dialogue and collaboration between regulators and the marketplace to do that, and to think about how do you promote public confidence and public trust, right? I think right now that's done again by regulating intermediaries, but how do you promote public confidence and trust absent that? Just would mention a couple of things that we've tried to do to sort of continually refine our approach. I think in the past, as new coins were coming to the market and our licensed entities wanted to add those coins, make those coins available to their customers, they were required to come to us for proactive approval of those coins. And we have since instituted inspired by some of the work of the CFTC, a self-certification process to enable companies to get coins to market much more quickly, while still imposing a degree of sort of regulatory rigor around the process. And then coming out of that, we also established a green list, so that once 3 companies we've licensed have adopted the coin, then that coin is then available for everyone else we license. And then most notably, kind of the largest kind of recent development is that we have exercised our conditional licensing authority for the first time. And we did that in the context of PayPal, and that's really with the intention of helping companies get to market more quickly. But we did it in a way that I think is, I think is sort of unique, but because I was sort of involved in it. But I think from a regulator's perspective, you're often thinking about how do you promote innovation while at the same time protecting consumers, protecting the integrity of the market. And what we've tried to do with the conditional licensing framework is say, if you're an entity that wants to enter into New York and get a conditional license, you can do so if you partner with an existing licensee, and between the two of you collectively, you are addressing all of the risks we're concerned about. And it's still early. I mean, PayPal is the first one to receive the conditional license, but we've received strong interest in it from others, and I'm hopeful that will help as the market continues to mainstream. The only other point I'd mention here is that as as kind of the space does expand, regulatory coordination and dialogue is so important. And I talk with my federal counterparts all the time, and I mean that is going to become just increasingly important that regulators are having open lines of communication.
Lawrence, if I could, I just want to jump in on the DeFi conversation for a moment, because Amy's referenced it and then Matt just brought it up, and I'll just, at least for what it's worth, share my perspective. I think this is like a really fascinating area, and I think that there are really interesting technological and software innovations taking place. So I start with that as my premise. That being said, where I'm a little more circumspect is at the end of the day, we talk about decentralization, but kind of by definition, a marketplace is a place where people meet in order to transact and trade. So there is a degree of some centrality around a market and trading activity that occurs. So what does that mean? I think what it means is that I'm a bit circumspect that a lot of this activity is going to occur outside of a longer term regulatory perimeter. I don't see that happening. In fact, I think market participants, in order to have trust in markets, are going to want there to be some type of a regulatory perimeter. But what that also means for regulators is that the regulator needs to understand who are the new actors in this trading realm. Are there some new types of intermediaries? Are there new types of business models for new types of intermediaries? And do the existing regulations make any sense for that world? So I think it's going to be a little bit of give and take on both sides. From an industry perspective, the idea that it's completely decentralized and outside the realm of regulation, I don't think that's where we end up. And I don't think that's where we end up for a variety of reasons. At the same time, regulators cannot take some of the activity occurring and try to squeeze it through traditional definitions or traditional concepts of business models that make absolutely no sense for what's happening. So I guess I take this very middle road view of where we end up with DeFi. I think that a lot of the innovations are going to be adopted and incorporated into the business models of traditional actors. So if existing markets and exchanges can benefit, learn how to increase efficiencies, increase access, reduce costs, that will happen. But there will be something that occurs in the middle.
Dan, if I could too, I agree with you. And I think we're still in a learning phase with DeFi, both in the way to make the technology work to its potential, and then where the regulatory perimeter exists. So I feel like we're in a phase of growth, and we need to better understand it before, I guess, having a bit of a too quick of a reaction to say, I don't understand that, and therefore it's a risk, and maybe act in a way that's deleterious to the growth of that innovation.
Yes, it's the hot topic, certainly this autumn, and I know that we've all been looking at it. I'll just get rid of my poll results here. And I think it has a complexity with it. I mean, the global headwinds, certainly again coming out of the G20, or particularly looking at the DeFi peer-to-peer space. Again, for all of us that are really trying to be constructive and digital long, and certainly might not understand all of the technologies, but are supportive of new ways of democratizing finance, particularly with social utility. There's an issue. I think there's about an estimated 12 billion kicking around in the DeFi market right now, and I'm not sure who knows what those products look like or what those markets are, but the risk profile looks to be significant for most participants, and that you can lose a lot of money, and it isn't necessarily clear which bit of the decentralized bit of the network or the actors have any degree of provenance of authority in it. And I think those are all overcomable things over time, but that's certainly the way policymakers or regulators talk to us in industry associations about. So I think there's some way to go with this, but again, I couldn't agree more, and I'd echo the sentiment of the panel that rather than jumping in, and the number of people that have said to me, "Oh gosh, is this the next, ICO bubble? Are we going to have to, really slam the brakes on this?" I think we need to really urge moderation on both sides, because there's a lot of very important things going on in this technology, but it's just going to take a bit of time to unpack it. So on the topic of asset classes and intermediaries, Dan, walk us through. I mean, you're involved in the digital dollar project, CBDCs, the intersection with stable coins. What can we expect in the reg front?
Yeah. So look, it's such an interesting topic, and I agree. When we reference Libra, there was the digital yuan project. These were things announced, last year. And I absolutely agree that it stimulated a lot of, global thinking. From a digital dollar project perspective, when I left the agency last fall, I started having conversations with former Chairman Chris Giancarlo, and he and I were just very like-minded that all of these themes we're talking about, tokenization of financial instruments and assets and how we transact them, was going to hit every type of financial instrument and asset. And there's absolutely no reason why that wouldn't involve and include money itself. The idea that you can take a bearer instrument, kind of like an old physical coin and cash, and create a digital version of that, or not even a version, it is money itself that would be issued by a central bank. I think that this is a somewhat inevitable outcome. And certainly the digital yuan and Libra, I think, helped underscore that likelihood. So from our perspective, the reason we launched the Digital Dollar Project as kind of a not-for-profit exploration was to make sure that the U.S. as a matter of a national policy was focusing on this issue, and it's an important one to understand the implications and ramifications for the U.S. dollar, and its role as a global reserve currency is critically important. And it's not something where you can flip a switch 5 years from now and decide you want to tokenize your dollar. There are a lot of consequences. There are a lot of trade-offs in terms of design choices you have to work through, privacy implications, security, banking, the impact on banking. So, I'd encourage people, I don't want to bog too much, but I'd encourage people to take a look at our white paper at the digitaldollarproject.org website, where we've kind of shared our view of a champion model for a U.S. Digital dollar. To your question about, the intersection with private sector innovation, we've made clear from the outset, in my view, there's no, a CBDC is not antithetical to private sector innovation. I mean, the way that I think about this is that we've already made kind of a public infrastructure choice about how we've designed money in the first instance. Like for an individual to hold a central bank liability, the only way you can do that is through cash or coin. When you hold money in your bank account at a bank, that's commercial bank money. The counterparty is the bank, not the central bank. That's a choice. Now, what we're proposing is to upgrade that public infrastructure. And I think what happens when you upgrade public infrastructure is you can get significant private sector development on top of improved infrastructure. I think a good analogy is to say, think of the road system. When the US built the federal highway system, did that have an impact on private transport models? Yeah, I mean, of course it did. It had an impact on private transport models, but I would argue it unleashed much bigger and better models, more efficient models. So private sector develops on top of that infrastructure. That's how we view a US CBDC. I think, a lot of the programmability and functionality of money that will be built on top of and around a potential tokenized dollar, that will all be private sector led innovation. And to be clear, we've also argued that any development of a US CBDC should be done in partnership with the private sector. This is one of those areas where, ultimate public-private sector collaboration makes the most sense. Most of the dynamism and innovations occurring in the private sector. So we should be drawing from that. You're going to have to involve, the banking system. We've suggested that digital dollars should be offered through the two-tiered banking system, through regulated banks or regulated financial intermediaries like FinTechs that are regulated. So it's going to require that kind of collaboration. So it's a very interesting area. I'm hopeful that the U.S. will move forward into a phase of real world, piloting and trials and testing. Because again, I think it's too complicated for any one of our brains to really understand the implications of how this flows through our economy. So I think we have to do that only through real world testing.
No, that's great. We've got 10 minutes left. Let's move into the last segment of the questions, and this is the the emerging areas of interest that we really want delegates to pay attention to moving into the future. And Matt, can I start with you? Really, as this market evolves, and I think you've all really outlined a compelling case for not just how vast it is, but how quickly it's evolving. How are regulators going to keep up with this? I mean, I'm heartened by your narrative around your own relationship and interaction with federal agencies. So, it's not just federal agencies. I'm always asking the CFTC around how global regulators have come together. But how do you see these relationships evolving?
Yeah, I mean, it's a great question. I mean, I think that, I would say a few things. I'd say one is just, the constant dialogue with industry is very important. I think that, the recent developments I announced, that was after, it was the result of extensive consultation with companies and others in the space. And so just maintaining that, and that, that can be, I think sometimes regulators can be a little walled off. And so being open to kind of that ongoing flow and dialogue is, can require some shift in culture in regulators, but I think it's absolutely essential. And then I think that we probably need some type of infrastructure among regulators themselves. I mean, there are sort of sort of informal roundtables and dialogues things of that nature that regulators have, but there's probably a need for something a little bit more structured to enable kind of that free flow of information. But the other point I was mentioning earlier around kind of improving regulatory capabilities, I think is really important. We announced that we're hosting a tech sprint, kind of modeled after what the FCA has done in this space, focused on digital regulatory reporting for cryptocurrency companies, really with the belief that there's no reason as a regulator we should necessarily just take kind of the supervisory structures of the past and apply it to crypto. There's the possibility of kind of inventing something from new cloth, given kind of the unique attributes of blockchain and kind of the space. So yeah, and I think that as regulators, I think that Amy and Dan touched on a good point. I mean, I think that you want to, as a regulator, you want to provide clarity to the market. I think the market often wants clarity, but you also don't want to step in too soon to sort of harm things. And so it's a very delicate balance, and figuring out ways to allow testing that enables the regulator to learn and the market to learn is important. And then knowing just when to step in before it's too late, but also not too early is really important.
Yeah, it occurs to me that market integrity and stability, particularly in this digital era, is one area that regulators should really look at, coming together and, possibly collaborating on. Amy, I'm sitting in London and I'm told there's a US election. I must have been asleep or something. I've not paid much attention to that. But can you give us your view on a new incoming administration, what this might mean to the crypto digital space, and if we can expect any changes, a change of pace, a change of tone?
Yeah, I think it's an interesting time. I mean, I think we don't have the clear result yet. I mean, I think it's officially certified in that step. But I think that going into the election, there was this impression from media, from polls, from whomever that that Democrats would have a clear win, a clear victory, both at the presidential level and then in the Senate as well. And I think we can say that that didn't happen as expected. It seems likely that Vice President Biden will be the next president. And the Senate is a question mark still, depending on 2 Senate races in Georgia. So I think what that means is, either way, whichever way that goes, say the Senate is Democrat, Senate's Republican, the majority will be so slim that it really it's not a blue wave as some had projected, and that will probably temper some of those maybe more progressive policies a little bit to the center. I think they'll have to be working together trying to kind of mend maybe some of the fences that are there to get some of the meaningful things done. What does that mean for big tech, right? Or even just tech? And I say big tech because big tech right now is in the spotlight. You see it from an antitrust perspective, you see it from content management. And I think from our industry's perspective, we're going to have to be strong at messaging the distinction between those things that are going on and what our industry is about. And you saw that with Facebook and Libra launch, right? I think there's a lot of blowback, but a lot of that was directed at, some past transgressions that legislators felt with respect to Facebook. So I would anticipate having to do a lot of strong messaging and education to make sure that understanding this industry doesn't get wrapped up in maybe some of the bigger tech conversation. That said, I think the Biden administration has indicated a bit of a savviness towards technological innovation. He has some people who understand this industry on his transition team. Professor Chris Brummer being on the Treasury team, I think, is a very strong indication, and Rina Agarwal on the Fed banking side. Gary Gensler is heading that, and I think he understands this industry well. I think some of his opinions on it may be cut one way or another, depending on how you view. So, I think that this industry won't be flat-footed, but I do think we're going to have to, as in a trade industry, get in to meet the new people and make sure that they understand the benefits of this technology, what we are, what we're not, so that smart things are done in those first 100 days.
No, thanks for that. And Dan, we've only got a couple of minutes left. I need to announce the poll results, but can I leave you with the last word on the election? And we've got a DACOM audience, so I know we're all focused on improvements in market integrity as we move forward. Could you say a few things on that? Thanks.
Well, I may steal a little bit of your thunder because I did see the poll results, and I'll start off with my election summary here. Well, no, I'm going to do this. I'm going to say for the election summary, I'm glad to see that most of our voters here don't like a czar in the U.S. So I think that's a positive indicator. But look, I'll pick up on what
that's my word. That's what they called them in Europe.
I'll pick up on what Amy was saying, and yeah, I mean, it's early in terms of who some of the individuals may be that end up in actual leadership positions within a Biden administration. But I will take a very positive view here that I do think that FinTech and innovation in particular are unique areas where we can hopefully avoid overly partisan divides. And I think we've seen that. I mean, there are members and leaders on both sides of the aisle who spend the time to learn about the opportunities that FinTech and crypto can present. Certainly, as Amy is saying, some of the folks who have been named to the transition teams are very forward-leaning. Certainly agree, when you talk about Dr. Brummer. As Amy said, Gary Gensler, incredibly knowledgeable in this space. I mean, he does understand the technologies and the potential advantages of technology. I do think one of the things that we will watch for is I think you're going to see an increased focus on investor protection, especially with respect to any perceived gaps in regulation. I mentioned at the outset we largely regulate the cash spot market for crypto at the state level. Not all of the regimes are as sophisticated with respect to things like market surveillance or cross-market surveillance, especially under a money transmission license. So I think that could become an area of focus as people, certainly like Gary, and I had the opportunity to testify alongside Gary. So we were in a hearing where I heard his views, and certainly he's one who will look at how some of those regimes operate and whether they're providing kind of the full set of investor protection requirements. So I think that that's an area to watch. But again, my broad hope is that this doesn't become a partisan issue. I think you're going to have members and leadership on both sides of the aisle who are very pro-innovation. And so that will be balanced with probably a bit of an increased focus on investor protection.
Well, that sounds great. Pro-innovation, but with a focus on investor protection is broadly where we are on the maturity scale by my estimation. So that's great, Dan. I'm just quickly, we'll run a minute over. I'm just going to quickly take you through the poll results. The first one is, how should policymakers and regulators approach the regulation of DeFi and dApps, which we've spoken about? The winner at 40% is regulate the activities. Very close to that was regulate the issuer, which is what the OECD panel tested #1 the other day. Only 19% at regulate the on-off ramps and only 5% that do not regulate. So the signal on DeFi and dApps is regulate the activities. How should policymakers bolster digital leadership across financial services sectors and products? And the winner here is better cross-border digital collaboration, which I think that most of us would agree with, and certainly is Matt's narrative today. A new financial services agency, digital financial services agency came in second at 33%. A digital czar is at the bottom. That's a very popular term certainly in Europe for someone in the administration to take control of digital. And then the last one is, how should the U.S. introduce, should the U.S. introduce an all-encompassing crypto regulation like Europe has proposed with MiCA? Again, MiCA has proposed to really bring regulators and professional counterparties all into the market and promote the use of crypto and digital assets. And so 81% said yes. Should the US introduce all-encompassing crypto regulations like Europe? 81% said yes, so 19% no. I don't know why I'm surprised by that, but I'll go away and digest this. Now, can I just say thank you very much to all of our panelists. Thank you very much to DACOM2020. I'm not sure, Chen, if I'm handing over to someone, but this has just been a fantastic hour. And thank you to all of the delegates for listening.
Thanks, everyone.